Hey friends, getting an awful lot of questions and starting a lot of dialogue through the comments and email and uh, phone calls regarding medical insurance. So, what kind of health insurance do I have? When you retire before 65, not eligible for Medicare, you're no longer working for a company in that 10, 15 years before Medicare kicks in. If you retire early, what do you do? So, that's the topic of this video. I struggled with exactly with the format I wanted to use for this. Do I use my whiteboard? As you know, or many of you know, I don't like using PowerPoint. I want this to be two people talking. I chose just to go verbal here, and for a reason. I want this video to stimulate thought and a path for you, not provide the answer. And the answer cannot be provided. I can provide the answer for me, and I can show you the path that I took to get that answer. So that's what I'd like for you to go on. You need to do your own research based on your health and your financial situation, okay? So I'm going to walk you through my path and my logic, okay? So first of all, I retired at 54, so I needed, 11 years of health care before I would be eligible for Medicare here in the United States. So, let's start at the cheapest option that's available to you. There's something called health shares. It's not health insurance, it's health shares. They're faith-based, and these are fairly cheap, but they need to be considered major medical. So you may be able to find, and I'm going to use two people. That's just what was for me, my wife and I. She's 2 years younger than me, so we're both in our mid-50s. And health shares, for somewhere around $300, $350 a month, you can get major medical coverage. So, for example, and they have different deductibles, but let's just pick $5,000 deductible. They really have no wellness care, but for $5,000, you turn in your bills, and then you get a percentage of that back, like 80%. Maximum out of pocket, let's say, is $10,000. And they're, at least the ones I found, didn't have a cap on what they would cover. So it's really major medical coverage. $400 a month, $350, $400 a month. It's not bad, but it is just major medical. It's not any wellness care, and it is faith-based. So you actually sign a pledge that you're going to live a certain way. Just as an example, temperance, drinking. So if you drink excessively and then get yourself hurt, they won't cover that, okay? If you drinking and you get a DWI, driving a vehicle and have all kinds of problems and complications, they don't cover that. So just be aware of that. That is not what I chose. Health shares. The next one up is what I call short-term coverage. And these are plans up to 3 years. I think 3 years is the max. By law, they allow you to have these. But again, these are major medical. You can get a $5,000, $10,000, $15,000 deductible on these things. And they're very inexpensive, maybe around $300, $400 again. But they do not cover wellness, going to the doctor, colonoscopy, mammograms, don't cover any of that. They cover major medical. So once you pay your deductible, they basically cover nothing till you get your deductible of $5,000. And then some of them cover 100% after that, okay? 100% after that, you pay first $5,000. So those are very inexpensive, and somewhere for a couple, around $400, you can pretty easily get one of those plans. Other downsides to those plans are that they can drop you. So like if you have a heart attack and your expenses are really high, and, they'll pay everything, but then the next year they'll drop you. You cannot get insurance through them. You have to go through somebody else. And that may be difficult to try to get approval to get a new insurance through one of these short-term medicals for the following year. So they work great as long as you're healthy. It's a great low-cost way to go as long as you're healthy. Not a bad way to go. I almost went this direction, and a buddy of mine did, and I don't think it's bad. Major Medical, $350, $400 a month. The next one I'll call is the Affordable Care Act. Some people call this Obamacare. And if you make less than, I thought the number was like $48,000 US. If you make less than that, you can get heavily subsidized premiums. Premiums as low as $300 a month, say. If you don't get subsidized, these payments are closer to, like, mine was like $13.50 a month for the two of us. But this did, there was no cause or no pre-existing condition clause, so any pre-existing condition you could get in. They had a lot of wellness care in it, so you can go to the doctor, you can have your mammograms, you can have your colonoscopy, all that's included. A lot of wellness inside of that, which is great. So good program there. These had very high deductibles, so you may be, when I was looking at this for myself, it was $1,350, and that had a $7,000 deductible, and then it covered 80/20 up to like $10,000. But really, that was fairly pricey, and I was looking for something different. Hopefully, you can hear me over the sirens going in the background. No fire at my house, okay? So the Affordable Care Act, what's a little hidden in there that was very scary for my wife and I. We're both healthy, don't have any issues, but they're state-based plans. I live here in Indiana, so I had to see doctors and go to facilities that were located here in Indiana. So, for example, if I developed cancer or something serious and wanted to go to the Mayo Clinic in Minnesota, or go down to Vanderbilt in Tennessee, or Cleveland Clinic in Ohio, it's not covered. So it's only state-based. So if you have something serious and you want to see an expert, they have to be an expert in your state. That's a big deal for me. That really made the Affordable Care Act distasteful. Okay. The next form of insurance is you can go directly to like a Blue Cross Blue Shield or Anthem. I guess they're the same, or United Healthcare. But the problem with those is they have wellness care in them, and they have these 80/20 maximum, deductible, $3,000, all kinds of good stuff with it. Facilities and doctors across the nation, but they're a couple $1,000s a month. So you compare that, a Blue Cross Blue Shield plan, $2,000 a month, versus a short-term care, or even the health shares of, say $400 a month. You're saving $1,600 a month. That pays for an awful lot of wellness care, and that's an awful lot of money to pocket for paying the deductible of one of these, $5,000, $10,000 short-term plans. So really, that's why I was leaning hard towards the short-term plans, because they're just so much cheaper, but don't cover wellness, and they can drop you. Okay, so a friend of a friend introduced me, or pointed me in the direction of Indiana Farm Bureau. Okay, and it's an insurance company. You got to be in Indiana for this, but they have them in other states, and they actually had a plan that was really very similar to the plan that I had through my work, and very similar to Blue Cross Blue Shield and Anthem, but at a very reduced price. Okay, mine has wellness care in it, 100% coverage of wellness visits, colonoscopy, mammograms, pap smears, that kind of stuff. That was 100%. Okay, and then it has 80/20 after that. You can pick a different deductible, like of $3,000 or $5,000, I think it was. Maximum out of pocket was like 10,000, sorry. And no cap, no annual cap, $0. And this, for my wife and I together, was $891 a month, but that includes vision and dental. They throw that in there. Indiana Farm Bureau throws that in there. I value that at about $100. So let's say $91. Let's value it at $91. So my health care, I'm paying $800 a month. Okay? Has wellness in it, no lifetime cap, $3,000 deductible, maximum 10 out of pocket. One of the reasons I chose this, it's a little bit, it's double. Let's say it's double the short term. Is one, they can't drop you. Okay, at the end of the year, they can't drop you. You're in for a lifetime. So I can pay this for the next 11 years, or until I age 65. Also, I did not want any pressure for me not to get wellness checks. So for example, if you want to save a little money, let's just not have that colonoscopy. Let's not do that mammogram. Let's do that every other year. Let's just skip it because it costs, $800 or something like that. I did not want any incentive not to have wellness. Okay, folks? Now that's just a decision my wife and I made. Financially, probably not the smartest decision, but from a health standpoint and a peace of mind and a game plan that we don't want to compromise, it was the best choice. So I'm very happy with that. You want good, low-cost insurance. You don't want cheap insurance. So that was my analysis, okay? So I looked at the low-end ones and I looked at the high-end ones and actually picked one in the middle. I thought it was important to have no lifetime max spend. Thought it was important to have wellness covered in there, and I thought it was important to be able to go to any specialist in the country. Okay, those were critical things that we are paying for more than the short-term plans or the health share plans. Now, one of the things I did not mention was these short-term plans. They always have a lifetime max. Okay, so they may be $1 million, maybe $2 million. And folks, you can go through that pretty darn quick. So these short-term plans, they're meant to be major medical, and if you have something major medical wrong with you, they're only going to pay through that this year, and then they're going to drop you, and then you're going out, and you got to go get a plan with a pre-existing condition. Now, the Affordable Care Act solves that. And if you're a low-income person, you make under $48,000, or you're making nothing, you're retired, you're living off your investments. Hey, the Affordable Care Act is very inexpensive, but you are locked into your state's facilities and doctors. So that was my analysis. Do your own research. This is the plan that solved for Lisa and I, healthy individuals, where we are on our income, what subsidy we would get, and a bias towards wellness care. I wanted wellness. I wanted no incentive not to get those tests. Maybe that's a weak will, but maybe you choose, and I can perfectly understand if you wanted to go with one of the short-term plans and just go year by year, and if you're healthy and save $400 versus a month compared to what my wife and I are doing. So hopefully this helps. If you got any questions, I'm still responding to every one of them, although you tested me last week. You give me about 50 a day. I was worn out, but please give me an email, give me a comment if this helps you out. This is Joe out.